Hi, everyone. Welcome to Bookkeeping Made Simple. My name is Donna, and I am here. This week, we're going to be focusing a lot on reports. This is something that many of my clients struggle with. It's something that is difficult for a lot of people to understand because there's three of them that you really need to look at. Like I talked about on Friday, there's three reports: the balance sheet, the profit and loss or income statement. It goes by both names, and the cash flows kind of come together to help you understand how your business is doing. So I wanted to take some time to go into those reports a little bit more in depth. I have a sample company. I swear I can speak English. I swear. I speak English, German, and Spanish, and you'd think I could at least get the words out. um, I have a sample company from QuickBooks Online open, so I'm going to go ahead and share my screen with you and start talking about where to find these reports and what they mean. So as always, if you enjoy these videos, please like, share, and subscribe. Hit the red notification bell if you're on YouTube. You kind of know the drill at this point. I feel like YouTube's been around for, what, 15 or 20 years now? It's been a while. So I think everybody that's going to be watching me on YouTube should know how to subscribe. Not, Dad, just let me know and I'll help you figure it out. My parents are still living. They are wonderful, wonderful people, and they are not very tech savvy. So that's kind of a family joke. Okay, so I'm going to go ahead and share my screen. This is a sample company, so this is not a real company. Okay, so if you see a name of a company, understand it is fake. I'm saying this mostly for YouTube's benefit. This is not a real company. I'm not doxing anything. This is a fake company from Intuit designed for this purpose. With that, I'm going to go ahead and share my screen and put my glasses back on so I can see what the heck I'm doing. I hate doing that because I don't like the way I look at my glasses. And we're going to share screen, and we are going to share this particular screen. Okay. So this is a fake company. You can see right up here in the corner, it says sample company. And we are going to go down to where it says reports. The first report we're going to look at that this video is about is the profit and loss. And we are looking at, I want you to pay attention to the dates. We are looking at January 1st to September 11th, 2023. You'll notice this particular date is year to date. And you'll want to make sure your reports are, your dates are put in properly. We're looking at this, and I'm kind of looking at this as an accountant and saying, man, they didn't make a lot of money, did they, for the entire year? So they have this actually pretty granular. We have income from design. We have some discounts that were given. Discounts given is going to be what we call a contra income account. That means it's not an expense. It contra against income. So this is something that goes against your income, but is not an expense. So a discount that you're giving out. And then we have some landscaping services and some job materials that they build for. And we have some labor that they build for. And some pest control. So you can see where there's different things that they build for. We're down here at the bottom, we've got total income. So for the period of January 1st to September 11th of 2023 in this lovely fake company, we have a total income of $10,200.77. Out of that, we have cost of goods sold, which is $405. Now remember, I told you your gross profit is your income less your cost of goods sold. Cost of goods sold is the things that you had to buy to produce the income that you generated. So up here, we have fountains and plants and soil and sprinklers and drip systems that they build out for, that is their income. And then down here we have cost of goods sold. Well, in order to find out what this is, we can click on it. There's $405. Oop. It doesn't allow us to do that. In a real company, you'd be able to click on this and see exactly what went into that $405. My suspicion would be it's going to be the job materials that they paid for. So we have job materials that they build, and we have job materials that they purchased that goes against that. And that's probably what this $405 is. Now we have some expenses. So this gives us a gross profit of $97.95. Okay, so that's the 10,000, your total revenue. They call it income here, but we'll call it revenue. Less your cost of goods sold gives you your gross profit. This is the number we're going to use to find gross profit margins, by the way, when we do that later. Now we have some advertising, we have some automobile expenses, plus some fuel for their car. If they're running around going to job sites, you can write that off. Equipment rental. I imagine since this is supposed to be a landscaping company, again, this is a fake company. I'm saying this mostly for YouTube's benefit. Since it's a landscaping company, they're going to have some equipment rental. So that could be a trencher, it could be a tiller, it could be specific, unique equipment that they need to put in landscaping that they typically don't have. Maybe it's something different. Maybe it's one of their pieces of equipment broke down and they needed to rent one. That's perfectly all right. Then we have an insurance. Okay, so this could be insurance includes health insurance. I usually break these out separately, by the way. Health insurance, general liability insurance, workman's compensation insurance they're all considered insurance. I do think it's good practice to break them down so we can see exactly what they are, because health insurance goes in a different bucket than other types of insurance. And we have some job expenses. How much? Here we go. Decks and patios, plants and soil, sprinklers and drip systems. These are things that are job materials that they purchased that they're also billing for. So this is things that they paid out for. And then we have legal and professional fees. There's $75 in other legal and professional fees, $640 to an accountant. That's probably tax preparation, $55 to a bookkeeper, which is ridiculously low for a month, and $400 for an attorney. None of these numbers really make sense in the real world, but that's okay. We'll just go with it. Legal and professional fees is accounting, bookkeeping, and attorneys. The only other professional, let's start with what's considered a professional as far as professional fees. That is legal, medical, and accounting, period. And really, it's legal and medical unless you're in the medical, legal and accounting unless you're in the medical field. And then you can include some doctors. But it's very, very, other than the inclusion or disallowance of physicians and nurses in this, you should see the same thing. So we have accounting, bookkeeper, and lawyer. Those are your professional fees. You do actually want the legal separated from the accountant, okay? So we have maintenance and repairs. That could be, 185 could be repairs to the office, repairs to their buildings. And then we have equipment repairs, which now that makes sense that they have equipment rental and equipment repairs. Evidently something broke down and they had to rent something to get through the job, right? Meals and entertainment is one I'm going to do a whole video on later. But that's how much, and I'm going to discuss how much you can write off for certain reasons, but we'll talk about that later. We have office expenses. Office expenses can include office supplies, so your Post-it notes, your paper, toner, ink, pens, pencils, scratch pads, planners, anything you can buy at Office Depot. Also can include salaries of office staff, okay? Then we have rent or lease. That should be pretty. This is of real estate, so their office or yard, whatever it is they're using. Then we have your utilities, gas and electric, telephone. And yes, it is expected to see that you're going to have all of these listed in your profit and loss at the end of the year. And then we have miscellaneous. Now, as an accountant, I'm seeing this miscellaneous and I'm thinking there should not be anything in miscellaneous. I can't click into this because it's a sample company. But for one of my clients, I would click into that, I would find out what it is, and I would make sure that gets recategorized to the appropriate category. or I would be asking the client about that. So we're going through this. We see our total income, $10,200. We see $405 in cost of goods, a gross profit of $97.95 and 77 cents. And then the next little thing we need to look down here, net operating income is $450, $45, $58, $46, but then we have some miscellaneous expenses that probably need to be charged against operating income. So that leaves us with net income of $1642.46. That is the profit and loss. It's actually fairly straightforward. I'm going to go ahead and stop the share so you can see my face again. And it's actually fairly straightforward. It is something that you need to be familiar with. Some of the things that you do need to be on the lookout for on a profit and loss is there should not be any negatives on a P&L, except for if it's a specific contra account. If you see negatives on your profit and loss, you need to talk to your accountant or bookkeeper about it and find out why. You should also, we never want to see miscellaneous expenses. Those should be actually categorized to a proper expense category. I almost never want to see miscellaneous or uncategorized expense or ask my accountant. Those categories, anything uncategorized, miscellaneous, or ask my accountant, we need to find out what they're for so we can categorize them properly. And then that'll give you a good idea of what your net income. Now notice they brought in $10,000, but their net income was only $1,600. And that is very, very common. You're going to have a lot of expenses. So don't worry about that. You're going to worry about the bottom line, but remember, this is only the first report that we're going to look at. Tomorrow, I'm going to talk about the balance sheet, and that's going to be an entirely different report. And then on Wednesday, I'm going to talk about the statement of cash flows. And on Thursday, I'm going to talk about how to wrap that all up in a nice little bun. Actually, I'm going to back up a little bit. I'm going to talk about the balance sheet tomorrow. I'm going to talk about statement of cash flows on Wednesday. On Thursday, I'm going to talk about how those reports work together. And then on Friday, we're going to tackle meals and entertainment and why that's important. So hopefully I stick to that. That's kind of the plan for this week. And I am going to go ahead and close the video and talk to you really soon. Thanks.